What is private money lending? Is it dangerous? Who does it? Why? Is it legal? Can I do it? And how will it help me? We're gonna go over all of these questions and their answers in today's video. Don't forget, like and subscribe. We come out with a new video every week talking about real estate, investing, and personal development. Let's get into it. What is it, this private money lending? It's basically one individual giving money to the other. The individual giving it is the lender. The individual receiving it is the investor, at least for this video, because we're talking real estate. You've all done it.
We do it every night. Every night.
You've all gotten a loan before. Now you guys might not have done it with real estate, but you've done it maybe to buy a car, pay for a vacation, who knows, buy snowboarding equipment. If you've gotten money to help you do that, you've gotten a loan, you have dealt with private money. Let's bring it back to real estate. If you're gonna go buy a property, you could go get a bank loan. Well, there are properties, certain types of properties or situations where bank loans won't work. So private money is getting a loan from anyone else that's not a bank. So we're excluding the banks. For most people I talk to, and including in this video, we're going to also exclude what we call hard money lenders from private money. They're basically private money lenders, except for they're an official company. It's their business. All they do is lend people money. And we'll talk more about them later. So most private money lenders are just individuals. Is private money lending legal? Of course it is. Like I said, you've all done it. It's been going on since the beginning of time. Cavemen probably did this.
Get the degree, then take a break.
It's your money. You can do whatever you want with it. There are no limitations on you on what you can do. Give it to whoever you want. With that said, there are some limitations and restrictions if you're receiving money and pooling it together. If I'm receiving money and pulling it together, maybe to do a large multifamily unit building or buy lots of houses, then I have to register with the SEC, who is going to restrict me on who I can receive money from. A lot of the times this is restricted to what is called an accredited investor. An accredited investor is a private money lender who meets two requirements. They have to have a net worth of $1 million or more, excluding their primary residence, and they have to make a certain amount of money for 2 years prior and expect to make the same amount of money for the current year you're in. If you're an individual, it's $200,000 a year. If you're a couple, it's $300,000 a year. If you meet those requirements, congratulations, you're an accredited investor. You're a private money lender, accredited investor. Which means if I had to register with the SEC and I was limited to who I could take money from, I would now be allowed to take money from you. Now, why don't you just pull money from everybody and go do it yourself? Well, you'd probably go to jail. It's illegal.
You're stealing, right to jail. You're driving too fast, jail. Slow, jail. You're charging too high prices for sweaters, you right to jail.
So don't do that. Know the people you're getting money from, have an existing relationship with them, or go register with the SEC and make sure you're just doing it the right way. If you're receiving money. If you're giving money, you don't have as much to worry about because it's the job of the receiver, the borrower, to make sure that you are qualified if you need to be qualified. So how does the private lending actually work? Well, it could be as basic as word of mouth, talking back and forth and saying, okay, here's $5,000, I'll pay you 10% interest, I'll pay you your money back by such and such. Now, I don't recommend doing it that way, even with family and friends.
Rule number one, never trust anybody.
So typically there's a contract. And in that contract, you need to put all the terms in there. How much money? How much interest if there's gonna be interest? How long is the term gonna be? Is there an auto extension? Is there a balloon payment? There are lots and lots of other terms and pieces to it, but you need to make sure all that is discussed and put into writing. And then they wire or send you over the money. And the investment begins.
Let the games begin.
Then, however you decided on payments, whether it's monthly, quarterly, yearly, when it's a house flip, it can be once the house is sold and finalized, then here's all your money back with your interest. However you're getting your payments, those all begin until it's done. Once it plays its course, hopefully you guys did everything right, everyone's happy, you grew your businesses together and made lots of money, and you're gonna go do another deal and another one and another one.
Another one.
Now on the investor side, how would they be using this money? Well, if they're buying a house flip, for example, they might go get a bank loan for it. They might go get a hard money lender loan. If you have a private lender that has enough money to pay for the house, the rehab, and all the other fees, well, you could just get one loan with the private money lender. You might, though, have to go get a bank loan or a hard money loan to buy the house, and maybe the private money lender pays for the rehab and the closing costs. You can work it out however you want, but obviously, as you can see, you need money to buy the house, fix it up, and pay all the fees. And a lot of times, the money also comes from the house flipper as well. It's important to know why would a house flipper keep borrowing more and more private money to do more and more deals. Well, that's because no matter how much money you have, eventually your money will be tied up and you will have to stop buying more properties. Investors don't want to have to stop buying properties, so they will use banks, hard money lenders, and private money lenders to buy more and more. They just need to make sure it all makes sense, everyone's protected, and getting their returns on their money, creating win-win scenarios. Now let's dig into some of the more specific benefits on why a real estate investor would want to connect with a private money lender and use their money. First would be speed to close. A lot of times they're buying properties that are more beat up, so they won't pass the bank's level of condition to give a loan on. Sometimes the homeowners are struggling to make payments or in foreclosure and they have a limited amount of time. They can't wait for 30 to 45 days to close, so a fast closing time. Two, you might need more flexible terms. So what if you didn't want payments coming out every month because you're doing a house flip? You wanted to wait till the profit was realized or made at the end to be able to pay all that out? A bank would never allow that to happen. You might need a loan instead of 30 years, you're looking for 6 months, 12 months, 3 months. Who knows? You can work out whatever you need with a private money lender. Or number three, it could be a lot higher loan to value ratios or even non-existent loan to value ratios. These are examples of all the hoops that banks typically make you jump through that you don't have to do to the same level with a private money investor. So you decided you wanted to be a private money lender, or you're an investor that wants to connect with a private money lender. How do you two meet up? Well, you might have already met up. Most of my private money lenders, I was already friends with or family with. And any of them that I wasn't already friends with, I am really good friends with them now. That is the best way to have success, is to build long-lasting relationships and create win-win scenarios. Look around you. That is the number one way. After you've done that, go to real estate meetups. Go meet other investors that are doing business. There are people that have money that want to lend it out, or there are investors there that want people's money. Go and connect with other people, build relationships there. Those are the main two places that you will find private money. If you just talk about it with everyone, you will be surprised at the amount of people that already know you and trust you and want to do business with you. Now, if you're not going to do private money, you could do hard money. You could do a search online and find these companies, it is their business, to lend out this money over and over and over and over. And they have different types of packages. They have what they call bridge loans, or construction loans, or rehab loans. They have actual products that they put out for specific types of situations, and they have specific rates for those, right? They're kind of like the bank. They will tell you what all the terms are and the lengths, so you don't really get to negotiate. However, they do have a very specific and useful point in the marketplace. They bridge the gap when you can't get a bank loan and you don't have a private money lender to use. They will still help you be able to buy the property. Almost always, if you can find a private money lender, you will get better terms than a hard money lender. Now, how much do you actually have to pay to use these private money and hard money lenders? Well, in my experience, you're definitely going to be paying more than a bank loan because you're getting properties or dealing with situations that are more high risk than what a bank institution is willing to lend on. So as a private money lender, you're able to charge more interest than a bank does. And in my experience, I have paid an interest anywhere from 6 to 16%. Obviously paying a lot higher when I was first starting, right? Because I had lack of experience. I didn't have as many private money lenders wanting to give me money. So I therefore was higher risk and paid more in interest. Sometimes I paid initial startup fees. And now after having a lot more experience, I'm going to be more on the lower side, way less risk with a solid, consistent return for our private money lenders. The interest rate that we pay out is a whole lot less. When it comes to hard money, we've paid anywhere from 9 to 16%. Generally, it is higher than private money, and most of the time they will have an upfront fee. So right now what I'm seeing is we're paying about 12% interest for most of our hard money loans, with anywhere from $2,000 to $5,000 of upfront cost. Now, the length of terms on these are also different than a bank loan. They're not 30 years. They're anywhere from 6 months to 2 years. Now let's talk about the risks. Being a private money lender sounds great. High returns, no tenants, no toilets, no termites.
Oh my!
There are still risks, just like any other investment. What if the investor you work with as a private money lender doesn't make the payment to you? Cash runs dry. What if it takes longer to sell the property than they planned? There's a lot of house flippers right now that planned on a month on the market and it's taken 3 to 4 months. It would be reasonable right now for a house flipper to try to ask for an extension. So know what your risks are, know what your tolerance is, and talk it all the way through. All right, but obviously the goal is to have success. So let's talk about that. You want to do not just this deal and make money together, you want to do another deal and another deal. So here's a few quick tips. Number 1, talk it all the way through and make sure you're on the same page. Not just about the risks, but all the terms of the contract. The number 1 reason to have issues with people in business is miscommunication. Heck, it's not just business, it's relationships, it's everything. So communicate properly. Number 2, know who you're working with. If you don't know them yet, get to know them before you fully commit. Or at least have someone else vouch for them or check the reviews if it's a company. That goes a long way. And then lastly, use the tools in your contracts that are available to you, like auto extension. That way you can know what the terms will be if you have to extend, rather than running into a complication. Don't forget to like and subscribe. Leave me a comment down below. Let me know, are you a private money lender or a real estate investor, and what are you looking for so you can make connections? See you next week.